You may have heard that paying taxes in Spain can be a pricey affair and that it comes with a list of obligations. So in this video, I'll cover the main taxes you need to be aware of in order to understand the Spanish tax system. Then I'll cover a hidden tax that is often forgotten, and finally give some general advice on how to navigate and simplify the Spanish tax system for a regular individual. Please note that this is all general information, and since taxes are a very individual matter, you may want to consult a tax professional if you want advice specific to your situation. Now, first of all, you may even want to ask the question, am I or am I going to be a tax resident in Spain? If you spend more than 183 days per year in Spain or have Spain as your main base, you will most likely be considered a tax resident here. If you aren't a tax resident in Spain, you will almost logically speaking have little to no tax obligations in the country unless you own any assets in Spain and or generate income in Spain, real estate being an example. In this case, you have to pay a non-resident property tax. On the other hand, if you are a tax resident in Spain, there are quite a few things you need to know. First of all, Spain taxes foreign income and assets. This means that if you live in Spain but own financial assets, property, companies, or other assets in another country, for example in your country of origin, Spain is going to want to tax this as they would with domestic assets. And even in cases where the assets don't require you to pay a yearly tax, depending on the value and nature of the asset, you can still be obligated to declare the asset in your yearly tax return. This could simply be a sum of money sitting in your account in another country, and if you're thinking, wait, what, I have to declare stuff even if there is no actual tax to be paid? Yep. In some cases, with foreign assets that exceed the value of 50,000 euros, you have to declare them yearly even if there is no tax to be paid in that moment. Confused? Well, Spain likes to keep tabs on your money, both local and abroad. Next up, we need to touch on income tax, as this is something that affects almost everybody. Now, the thing about Spanish tax on income is that we can divide it into two groups. First of all, we have the regular income tax, also known as the IRPF in Spain, and this is a progressive tax. That means that once you exceed a certain income level, the money you make from then on will fall in a higher tax bracket. The income tax starts from 19% and goes all the way to 47%. If you're interested in knowing exactly how much you would be paying in income tax, I have left a link in the description to a tax calculator that will give you an exact amount based on your post-Social Security income if you are a salary paid employee. Oh wait, Social Security. Now, what is that in a Spanish context and why do I need to care about it? So this is where we get to the other side of the income tax aspect and a somewhat forgotten income tax. Social Security is a tax that is paid on your behalf by your employer if you are a regular employee. This means that you never see this money and that the income tax mentioned earlier is taken as a percentage of your post-Social Security wage. Subsequently, this means that Spanish taxes appear to be artificially low if you only look at the IRPF, as the regular income tax doesn't factor in Social Security. This is easier to explain with an example. Let's say a worker has a base salary of 2,000 euros per month. Of the 2,000 euros, the employer must pay their part of the Social Security contribution, which is around 30%. This means that the gross salary in reality is the 2,000 euros plus the Social Security paid by the employer, thus 2,600. Then the employee also pays around 6% in Social Security, so let's add around 120 euros. Then we get to the IRPF income tax, and here we use the tax calculator, which says 310 euros. This means that the net salary per month would be 1,570 euros. So how much are you actually paying in taxes? Well, it is tempting to say that it is simply the 120 plus 310, which is what will appear on your payslip. This would give an effective tax rate of 21.5%. However, since the Social Security contribution paid by the employer is also a tax regardless of who pays it, your actual effective tax rate is 600 plus 330 divided by 2,600, which is almost 40%. Please note that this is an example with fictive and estimated numbers, but if anyone tries to tell you that income tax in Spain is relatively low, please always remember that whether you call it Social Security or income tax, it doesn't really matter, as you have to pay both regardless and that they relate to your income. Worth noting is that if you have people that depend on you, such as young children, you will get a discount, but don't expect it to radically change the amounts. If you are self-employed, for example as a freelancer, the income tax situation is similar in the sense that you have to pay Social Security and income tax. The main difference here is that you have to pay the Social Security contributions yourself, while the IRPF tax brackets are the same as for a salaried employee. The payable Social Security amount does, according to a new system that has recently been introduced, also depend on your average income as a self-employed individual, so expect to pay between 230 and 540 euros per month as a flat rate. And even if you make only little to almost nothing in terms of income one month, you will technically still have to pay this fee. Finally, there are a few other taxes you may also want to note. As for the capital gains tax, it ranges between 19 to 26% and is also applicable when selling property. However, the yearly property tax is, for most properties, a manageable amount, as the main tax is paid upon buying and selling the property. Spain also has a wealth tax and an exit tax that are relevant for high net worth individuals. In terms of how to navigate the Spanish tax system, you don't have much to declare if you are a regular salaried employee without foreign assets. You do technically, in most cases, have to make an annual tax declaration. However, this will be relatively simple. On the other hand, if you have foreign assets, have a self-employed status and/or own capital assets, the situation becomes more complex. If you are self-employed, for example, it would be my strong recommendation to get a good accountant to do your quarterly and annual tax reportings. If you have a high salary and want to minimize your income tax payable, you can look at a tax scheme named the Beckham Law. Feel free to guess where that name comes from. On the other hand, if you have a limited and/or unstable income as a freelancer or on a contract basis, you really need to factor in the Social Security contributions as mentioned earlier. Spain is not a great place to be a taxpayer for this group, so you may even want to reconsider your tax residency or source of income. You are very welcome to ask questions in the comment section and I will do my best to give a useful answer. However, please note that I am not a licensed tax advisor and that tax liability is and always will be an individual matter. Alright, thank you so much for watching and feel free to leave a little money bag emoji in the comment section if you survived listening to all this tax information. Don't forget to subscribe, that really helps me a lot, and see you in the next video. Bye!